Welcome to Caching Waves. This is an Elliott Wave update for Bitcoin. Now in this video, I'm going to be discussing the different Elliott Wave scenarios I have mapped out, as well as the entries I'm looking to take and the invalidation levels of each count. Now before we get into that, let's just do a recap on my primary count yesterday, which was right here.
Very shy correction here. If this is a wave 2 as our 1, 2, and then this would be our 3, 4 right here, 3, 4 as our triangle, and we'd be looking for 5 waves up, and it looks like a diagonal. We get our 1, 2, 3, 4, 5 to complete a 1 lesser degree 1, 2. So we have 1, 2, 1, 2, as you can see. So we'll talk.
So that was right here yesterday, as you can see, looking for this correction to the downside, where we're correcting this entire 5-wave move to the upside. If you're new to Elliott Wave, this is how the market tends to move. We get an impulse correction, and we do that at different time frames and scales. Now, I was lucky enough to snag that top yesterday. As you can see, my stop was all the way at invalidation, though, all the way up at 74,000. So I'm up slightly right now, and my stop is at break even, guaranteed 488 right now. So if you are taking this trade, what I'm planning to do is just ride down the 66 retracement of the move down. I'll just continue to pull the pivots as we move down until I see a completed count, in which case I will flip long. That being the case, still looking for further downside, but we're going to go out to the daily and I'll show you my larger counts. Oh, excuse me. As far as the larger time frame, have a 4th wave complete. This is out on the daily, looking for a 4th wave to be completed here, looking for the 5th wave to the upside. Right now, that target is only 98,000 on log scale, which is the extension of wave 1 off the low of wave 4, the 1-to-1 extension. But because we didn't get an extended 3rd wave, we only came to the 1.618 extension of wave 1 off of wave 2. We usually look for one wave to be extended in a 5-wave impulse. This is not extended till it passes the 1.618. So that opens up the possibility that our 5th wave can get extended and get much larger targets. But that's a discussion for another video. We take this time frame by time frame. Now on the bearish scenario, I'm only talking about this because it's possible. I like to have at least one bearish count, even though I think it's very low probability. And the way I would have this is as a wave A. This is the beginning of our correction to the downside. All that move from the 2021 high. This is all a 3-wave B. And we get a 5-wave move down to around 30,000. But again, we'd have to track this as it pans out, looking for 5 waves to the downside to complete a larger ABC as a flat. Very low probability. Reason being, the count here out on the daily for this is a expanded diagonal followed by a flat as an ABC, and this is our diagonal complete. That came extremely deep on the wave 1, which is very low probability. And I don't like the fact that this looks like a clear 5-wave move, which in a flat, we have to start with a 3-wave move. So it would have to be some sort of complex combination for this A wave, B, and C. So that's why I put that very low probability, although I am putting it up there for the fact that it is technically possible. Now, if our 4th wave is yet to be complete, I believe it is. Just want to show you that as well. The way I would map this out is as a more complex correction. This is where we get a B, C, triangle B for our W wave, flat for our X wave, and this would turn into a flat as an ABC, looking for 5 waves down. So this is a combination where we have a zigzag X and a flat. What's nice about this is if we do make this move, we expect to finish around the same price area as wave A. This completes the pattern, and we actually continue to the upside again. After that, it would just scare the shit out of everyone, obviously, but that would be an amazing buy if that happens. If you're an Elliott wave trader, you want this to happen because you can get a lot of position size on that move after. Okay, so that's my main count on that. There is also the scenario that this B wave comes higher, but we'll talk about that in another video if we continue to move up. Okay, so down on the smaller time frames, we're considering in these counts that this fourth wave is complete. So first of all, I'll go through the alternative counts, and then we'll go to my primary count from yesterday, which was the 1212. So this is the fourth wave low. I have this as a diagonal complete, as a 1, 2, 3, 4, 5, and we're looking for an ABC correction to the downside. Now, typically a leading diagonal, wave 1, this would be wave 1 and 2 of our larger 5 wave on the daily. Most of the time we get sharp corrections. So we'd expect a zigzag here. And in leading diagonals, we usually come between the 50 and the 786 right here, this box, if we get the zigzag to the downside. So that price range is 59.2, 59.76 to 52.808.64. And that's both different scales, the high of the range, 50, and the low end on log at the 786. So we want to hold this wave 2 in that scenario to come to our most common retracements if we get a zigzag. And I'd expect to hold wave 2 on that level. We'd probably scoop liquidity under wave 4 as well as some of these areas here. And I would like to see us hold that area. Now, invalidation of this diagonal is actually all the way down here at 49,000 at that wave 4. So we're using our guidelines here. Now, if this is extremely bullish and we get this diagonal and we don't get a sharp zigzag correction, we can get a flat correction. And what I'd like to see there is the 382, which would be something like this. Sorry, we'd get a 3-wave move, probably a double zigzag for our A, come up for a B wave and get a flat, whether that's running flat, expanded flat, we're not sure. But that's where our B wave comes extremely high. But as per guidelines, in a wave 1 leading diagonal, we expect a zigzag sharp correction. That's where the probabilities lie. So just keep that in mind. So also, this wave 5 within the diagonal can actually come, we go to the furthest of the two, 72.89, we go between log and linear. It's not invalidated till we actually come above 74, 591.65. So this can actually still be in the wave 5. It's not invalidated till we break above, and we can still get that correction back. So that's why in my trade setup, I'm locking up at least profit, and if we get that move up, I might look to re-enter, right? Why give away what I've already basically made a free trade. And obviously we like to see a little throw over there for our wave 5 within our contracting trend lines, but we don't want to come too far where it becomes unlikely, right? So that's my bullish scenario, wave 1 of 5 in the larger degree, where we freak everybody out here, right? But bear market starting, right? But if this does become impulsive to the downside, we also have that bearish scenario. It depends how quick this move. Now, as per time, I took the extension of this wave 1 of 5 within the larger 5th wave. I'd like to see at least a 382 in time. This is a guideline again, and at least a 618. So we would get extended out in time here if this one plays out. Okay, how do we keep moving up from here correctively? This is another alternative, that is that we are still within a 3rd wave of a larger diagonal. This is the trouble when we have so much complex structures in this area. There's a lot of scenarios that can play out. Now in this scenario, these are very tough waves to count. The way I would map this out myself is either this is a WXY here. This is double zigzag for our wave 1. The way I would map this out is you can count this as a 3 or 5. This is our B or X wave. So this is a W or a wave A. And the way I would put this as an impulse is a wave 1, 2. This would have to be a 3, 4, and we get an extended 5th. Or it's another WXY, ABC, X, ABC, right? Now, in this scenario, we would most likely not overlap wave 4 with wave 1, which usually we do in a diagonal. We don't have to, but again, we like to stick to guidelines, right? So if we continue to the upside correctively, this would be my bias. And again, I don't know how this market's going to move up, but if it's correctively, a lot of overlap, then I would start to lean this way. So that's scenario 2. And finally, this is the primary right now. It's fitting. This is kind of based on my overall macro view that we're going to be starting our bull market relatively soon for many different reasons. I'll go into that in a different video, but this video would be like an hour if I do. But this is my primary view. This is what I'm basing my trading decisions on currently. And if this proves invalid, then I will switch to one of my alternatives I showed you. So the way this one maps out is WXY correction. Again, that zigzag X wave followed by a triangle 4th. Now, the only thing I didn't like about this, these were all nice shapes, except for this E wave. It's truncated, right? Usually, if I extend out this trend line, usually you want overthrow on that trend line and then reversal. We don't always get that. Technically, it's there. And until this invalidates, this is going to be my primary for my trades. So on that, you have to start the count from 57,493.30, which is the low end of that 4th wave, and have this mapped out as a wave 1 and 2, 1 and 2 of one lesser degree, which is what I showed in the video and my trade setup. So after this completes, I'm looking for a massive move to the upside, a third of the third, the FOMO wave. Probably news would come out, good news, etc., to confirm that, and we'd get everybody buying into the breakout above. So we'll see if we get this. In this scenario, the triangle is invalid at 57,493.30. This nested 1, 2, 1, 2s, this second 1, 2 is invalidated at 58,946. So if the fact that I'm trading it this way, all my stops will be no lower than that, right, for this scenario. There's no reason to. That invalidates this entire scenario. So wave 2s, we expect zigzags. Most common areas between the 50 and the 786. Again, I went on log and linear. There's our price range, 64 at 232.76, 61 064.38. Now, if this is extremely bullish, we can also come to the 382, make some sort of flat corrections. When we become extremely bullish, these become the default. So if I'm in an area where Bitcoin can potentially get very bullish, I need to pay attention to these. If you go to previous bull markets, you'll see these everywhere. Running flats, that's where we get the A wave. B wave's higher than the previous impulse, and our C wave never invalidates our A wave. I'm not saying that's going to happen, but when we do get extremely bullish, those are our default corrections. So we have to adjust based on the market conditions of the current cycle, right? So as of right now, I mentioned I am short. Usually we look for the extreme of the lesser wave 4 for our correction to potentially be done, well, somewhere within our wave 4, which is actually pretty wide. This was an expanded triangle wave 4, which is a rare correction, but I'd look for the lower end of that. That's at 64,805-ish, still above my zone I want to buy, and I'd want to hold this wave 2 area. So we'll see what we get. I'm going to track this as we go, but I would expect it to eat up more time if this is what we're getting. Remember, it's if this, then that. I mean, if this starts going to the upside, I get stopped out. I have to go with my alternative counts and try and decide where I want to go from there, right? If there's a good entry available. But as of right now, this count as well is ugly. It looks corrective, which is good for the bulls larger term. It doesn't mean we're not coming down here, but I mean larger term. If this looks corrective, that's a good news for the upside bias, right? So I'll go down to these smaller zones. Yeah, there's not much here. There's a lot of noise on 15-minute and below. I tend to just use more Fibonacci extensions and retracement levels to try and get on the right side of things. One thing I can see here is potentially an impulse, but I don't like that because if this is our 1, 2, 3, 4, 5, it looks like our fourth wave and that micro came too high past the 618. Yeah, not invalidated. Our invalidation would be if this is our 5-wave move. Invalidation would be that overlap, right, with that wave 1. But when we pass the 618, I don't like to use that as my count. So what I would probably suggest is this is probably an ABC to this area. ABC, 1, 2, 3, 4, 5, something like that, or over here. Doesn't matter that much in the grand scheme of things. But it's clear this wave is ended because we're drifting sideways outside of our channel. So this is most likely a wave 2 in a wave to the downside, where this would become an A, B, and we get our C wave down. Or this is a zigzag A, B, C. This could be some sort of triangle so this would be a W, X, Y if we get the 1-to-1 here. But again, I need more information to go off of this, right? I'm already in my trade. I want to see a little more clarity here. But right now, I'd be more likely to call this a zigzag. So I'd be looking for this is a W wave and some sort of X as either a expanded flat where we come above this level, or a triangle if we hold this area and look to target the 1-to-1 extension of whenever this pivot comes, right? And that would be our first wave in our larger correction. And this is where things get very complex. If you get into Elliott wave, this is where these sort of scenarios end up turning into diagonals, right? Depending on the count, and that's our first A wave, right? And a zigzag. But anyways, I'm over complicating things now. Very simply put, my stop is at the 66, past the 618 retracement area of the entire move down so far from the last pivot high. And I go with the furthest away between log or linear. 3968. So if you were on Binance, it would be the 66. Right there. And as we come down, I'm just pulling that down for my stop. And if we hit a 1-to-1 extension, I'll probably most likely take out this trade. All right, guys, I hope that was helpful. That's it for this one, and I will see you guys on the next one.